Bitcoin's still holding out the middle of the range, creating higher highs, and it's just taking a breather from that big move back. But what I think is the main thing to look at today is yesterday, if you watched my video yesterday, you would have seen me talking about the 50% wick, and there's potential to fill these wicks. And as you can look at these charts as I go through them now, you can see them going up to fill this 50% of the wick. Now some might fill 50% of the wick and then fill 100% of the wick. This is common as well. But the first stop is 50% of the wick. So I put this on previously, so these were on from my videos if you saw them yesterday. You look at Bitcoin dominance, that is starting to range up. This is because Bitcoin is staying level. It's not really moving. But the alts are starting to go down. And these alts are going down because they're going to do a 50% wick fill of that daily candle. And because alts are going down and Bitcoin isn't, that is increasing the Bitcoin dominance to hit 50% of that wick. So you've got 50% of that wick to get hit. You've got Ethereum Bitcoin that's starting to come down. It's taking a little bit longer. And you've got the alts that are coming down. So all these charts are in sync with each other to do a 50% wick fill. It's so cool when you actually start seeing this. And even on alts against Bitcoin, that's going to do a 50% wick fill as well. So this is something we need to watch. Once all these charts hit the 50%, they might think that's enough and then they move off. Or they might come down and do 100% wick fill. So right now I'll leave the 50% on, and over the next couple of days I might just add the 100% on as well, just to give us something else to watch for. Anyone who's been watching my video literally saw me do this yellow squiggle at random, just threw it up as I was chatting. And as you can see, it's turned out to be 50% of the wick, almost exactly. And the charts are following this almost exactly. It's I'm not that good. That is quite a lot of luck on my side there as well. I was just predicting the fake out. Excuse me. But it looks like we're going to get a 50% of the wick fill here. So once that happens, it should carry on down. So all the charts are kind of lining up and they're all saying the same picture. The interesting one for me is yesterday you saw me talk about the 10-year yield and how that was at the top of the range, and how this basically will lead the interest rate the central banks are doing, because they're pretty much going to look at the same data, the bonds market, and just make the same decisions, but they can make it earlier rather than once a month like the Fed. And you can see at the top of the range, it played a head and shoulders, left shoulder, head, right shoulder. And we take the measured move from top to there. And then from the breakout, that's our move. Which is interesting because that takes us down to the 200 EMA, which is good. So, this looks like the big picture is the Fed's going to start cutting interest rates, but they're saying they're not. This is why it's so key to understand charts, because you can understand what's going on before everyone else does, because these are the trails. This is like the breadcrumbs of the evidence of what they're actually doing. So the bond market's pushing the interest rates down. But then we see something else here with oil. This is interesting as well, because oil was on a huge... This was dating back to 2022. I think this was the height, the start of the Russian war when it came up. But it's come down. 1, 2, 3, 4. They normally break on the 4th or 5th line. But if people are paying attention here, you might have heard me talk about the descending triangle as well. Look. a descending triangle. This is actually bearish. And look what might be happening. We might have had a fake out on here. And now if this closes below in 1 day and 3 hours, this closes below this trend and below the EMA, 200-day EMA, and the bull market support, we've had a confirmed fake out in a bearish chart pattern. So the very likelihood is breakout, everyone thinks we're going long, so everyone longs and it just flushes the price down. But I want you to think for a second here. So if the bonds are coming down and it looks like they're breaking down and the Fed fund rate's most likely going to cut, then if oil price comes down and fakes out, it's going to break down it's going to come down to here, at least around about 50. So a wee note here, because sometimes I'll be speaking and I might not get any points across, or if I'm chatting you can read this as well, but if oil goes up, inflation goes up, interest rates stay high, so stocks and crypto prices are way down, they can't get going because the interest rates are high. But if the oil goes down, that's not inflation, that's deflation. So, well, not deflation yet, but it can potentially lead to this. But if oil prices go down, inflation goes down, and that's when interest rates can be cut and stock prices start to fly. So I had this. No, anyone who's watched my videos, I had this on already, and I was saying watch out for the fake out or retest. And this looks like it's a fake out. So if oil prices go down, interest rates are going to cut. And you can see this in the bond market. They're already pricing in rate cuts. So even though the Fed is talking tough right now, it looks like rate cuts are coming. And when rate cuts come, more money comes in, the liquidity starts going. And if I just look here, I could probably do this. I've got it, yeah. Global liquidity. So you can see the global liquidity there on green. Coming down, it's coming down. That's starting to tick up as well. So, is this the start? They're obviously talking a tough, hard game, but it looks like the markets are starting to price in rate cuts. And that's before it even comes out in the news, just by looking at the charts here. And once these rate cuts come, see how it all lines up. This is when Bitcoin dominance goes down, because the rate cuts are coming in. Everyone rotates from Bitcoin into alts. Everyone goes risk on. So they go further and further down the risk curve. So when the rate cuts happen, that's when the whole world become degens, and it just goes parabolic. And it's just on schedule on the 4th year of the cycle. It's so crazy how it all ties in, and it's almost like you can't believe it. You just read it through the charts. No one else knows it. But if you can read the charts, you can see it coming. So, and we've had a huge shakeout. So is this one last final shakeout? And then we go off. Maybe end of Feb, start of March, or the next FOMC meeting, maybe they announce a cut, and that cut will be the trigger that sends the market. So, very interesting here. It's I think we go up, do the wick fill, and fill all the wicks across all the charts, and then from there we'll reassess. Is it going to go up and take 100% of the wick, or they've taken enough and they're going to go down? And this one is just for one of the guys that commented on the last video. I just asked if you got any charts, and he was asking about gold. So just on the weekly, you can see it's an uptrend here, and if you look here, it's on track to hit the top of this channel. No reason why it shouldn't. especially if this is another confluence. So if oil's starting to go down, there's maybe some cracks in the economy, and gold always knows something, so it's starting to move up because you tend to hedge in gold. But 3,000 is a nice round number, so that's a psychological level. And this top of the channel is 3,000, if you look at there. So my target for gold is around about 3,000, and then from there we should see a pullback as it just jumps off, bounces back, finds its feet, and then it carries on moving. So to your man who asked me yesterday, 3,000 is the target for gold right now. Hope you guys enjoyed that one. Again, if you found it useful or anything, like and subscribe. I do these every day. I'll be back tomorrow with some more, and at the weekends I might start doing some deep dives into different areas of the markets as well. So thanks for the time, guys. I'll put another video again tomorrow, same time, and I'll speak to you tomorrow, guys. Nice one. Thanks. Bye.